Welcome back, everybody, for another deep dive. This time, we're going to be looking at an article with a pretty intriguing title. It's called "Cómo he ganado dinero con la crisis del coronavirus y cómo seguir ganando." So, how I've made money with the coronavirus crisis and how to keep earning.
Yeah.
And it's a personal account of investing during COVID. So I'm really interested to see what we can learn from this.
Yeah, right off the bat, what really struck me is how the author addresses the elephant in the room, right?
Hmm.
Like they acknowledge that profiting from a global crisis can feel a little well off, but they're also very clear that this is their personal experience, not financial advice.
Right. So let's approach this as a learning opportunity then. The author boils down their success to four main points or elements, as they put it. Number one is having a clear plan. Sounds pretty basic, but what did that actually look like for them?
Well, they actually went a step further than just what to buy and at what price.
Hmm.
They also figured out their exit strategies beforehand. Like, what if their initial idea was wrong? It's like having a roadmap, even in a completely new landscape.
So preparedness was key. But they didn't just go with their gut, did they? They also talk about what they call useful macroeconomic reasoning.
And this is where it gets really interesting. They weren't just focused on individual companies. They were looking at the bigger picture, like connecting the dots on a global scale. For instance, they paid close attention to how COVID was affecting the stock markets in China and Italy.
And from that, they sort of figured out what might happen in the US and Spain, so using global trends to inform their local investment decisions.
Exactly. They saw opportunity where everyone else was seeing, well, just chaos. It reminds us that even in a crisis, staying informed, thinking critically, it can give you a real advantage.
For sure. And their third element is a classic: buy good companies at a good price. But they actually put this into practice during a huge market downturn. That must have taken some serious guts.
Oh, absolutely. And that leads us to their last and maybe most important point. Don't sell too early. They call it letting your winners run.
So now I'm curious about which companies they saw as winners. They list quite a few: Alphabet, Disney, Facebook,
Global
Inditex.
Dominion, Pax Global, Airbus, AirCap, yep. It's a real mix of different industries, which suggests they weren't banking on any one sector to recover.
They were spreading their risk, but going after companies they thought would bounce back from the pandemic's effects. The author specifically mentions Baytex, a Canadian oil company, as an example of letting a winner run.
And this is where the whole idea of compounding comes in. Let's say you invest $1,000 and it grows by 10%. You now have $1,100. But if that grows another 10%, you're not just adding another 100, you're adding 10% of 1,100, which is $110. So those gains start building on themselves, and you can see how over time that leads to, well, exponential growth.
Yeah, like a snowball effect. But they also admit to making some mistakes, times when they sold too early. GameStop, Golar LNG, and IPCO come to mind.
Right, and those cases show the potential downside of, I guess, getting scared by short-term market ups and downs.
Yeah.
Especially in a bull market, they might have missed out on even bigger gains.
Interesting. And that actually leads us to one of the most provocative things the author says. They believe diversification is overrated. They even say, nadie se ha hecho rico diversificando. Nobody has gotten rich by diversifying. That's a bold statement. What do you think?
Well, it's true that some really successful investors do concentrate their holdings. But, diversification is still a basic principle of managing risk, especially for someone who's just starting out.
It's about finding that sweet spot for yourself, right?
Hmm.
The potential for those bigger returns, but also the risk of putting all your eggs in one basket.
Right. Now the author actually shares their portfolio performance since 2019. And guess what?
They beat the market, outperformed the S&P 500. So, at least in the short term, it looks like their approach worked.
Yeah. But it's key to remember that this is a pretty short time frame. And past performance isn't a guarantee of future results, as they say.
So, we shouldn't all rush out to copy this strategy, but there's definitely a lot here to unpack.
For sure. The author's journey has some valuable lessons about preparation, analysis, patience, and the courage to stick with it.
Now, before we get deeper into those lessons, I want to hear from you, our listener. What's standing out to you so far? Anything surprising? Hold on to those thoughts because we'll be back in a moment to break down what this all means for you. Okay, so let's dig into what we can learn from this investor's experience, even if we're not, stock market experts.
I think one of the biggest takeaways is that even in tough times, like a crisis, there are still opportunities out there. But you got to be ready to grab them.
Yeah, and the author had a plan even before the pandemic hit, right? which meant they could act fast when the market went crazy. It's like having that roadmap we were talking about.
Right. Having that roadmap helped them not get caught up in all the fear and panic that was going around.
Yeah.
A lot of people made some bad decisions because of that.
The author also did their research looking at global trends and using that useful macroeconomic reasoning to come up with a strategy.
Instead of just reacting to the news, they were connecting the dots between things that didn't seem related. Like they saw those lockdowns in Europe messing up supply chains, and they figured the same thing would happen in other parts of the world.
That's a great point about how looking at the big picture can give you an edge, and not just in investing, right? Like in anything.
Oh, absolutely. Now, the author's take on diversification, or I guess the lack of it, is something to think about carefully.
Yeah, their concentrated bets paid off, but that level of risk is probably not for everyone. Most people are better off spreading their investments around.
Exactly. It's like they say, don't put all your eggs in one basket. But the author's decision to hold on to those winning investments, even when they felt like selling, that really shows you the power of patience.
That's where that compounding really kicks in, right? The longer you can let those gains grow, the more they can multiply. It's like rolling a snowball down a hill. It just keeps getting bigger and bigger.
Right. But it also takes discipline. You have to ride out those ups and downs in the market and not freak out.
Absolutely. Successful investing is probably more about managing your emotions than finding that perfect stock pick.
Couldn't agree more. So let's break this down for our listeners. What are some actionable things they can take away from this deep dive? We've talked about preparedness, smart analysis, the courage to hold on. What else jumps out at you?
Yeah, what else?
I'd say it comes down to having a framework for making decisions, even when things feel crazy and unpredictable. The author had a clear set of principles that guided their actions.
And those principles weren't super complicated either. It was about doing your research, understanding the bigger picture, and believing in your plan.
And this isn't just about investing in the stock market, right? These principles can be used in any part of life where you're taking calculated risks.
Absolutely. Starting a business, going after a creative passion, making a big life change, having that framework is so valuable.
It's about looking at the risks, finding the opportunities, and having the toughness to stay on track even when things are hard.
This deep dive has really got me thinking about how I can use these principles in my own life. It's a great reminder that even in uncertain times, there are always lessons to be learned and things we can apply to our own journeys.
And that sometimes taking a calculated risk can lead to, well, amazing results.
So here's a final thought-provoking question for our listeners. How could you apply these principles in your own life? Whether it's investing or anything else where taking a smart risk could lead to those big rewards we've been talking about.
Maybe it's finally starting that side hustle you've been thinking about, or investing in your education, or even just speaking up for what you believe in, even if it feels scary.
It's about finding those areas where you might be playing it too safe and thinking about how a little bit of calculated risk could really help you grow. So we've covered a ton in this deep dive, and I'm curious to get your take on what the author's future plans tell us.
Well, it seems like they're kind of shifting gears. Moving away from some of those pandemic plays. Now they're looking at oil companies, a Chinese payment processing company, a mining company, even some companies in the airline and tech sectors.
Interesting. So a move toward oil, but still interested in those growth sectors like tech. It'll be fascinating to see how those bets turn out. But it's important for our listeners to remember that this investor success wasn't just about picking the right stocks.
Exactly. It was how they went about it.
Yeah.
The preparation, the analysis, the patience, and having the guts to act on what they believed. Those are the things that can be applied anywhere, really.
Yeah, this deep dive has been really eye-opening, seeing how someone navigated all that uncertainty and not just survived, but actually thrived.
It's a good reminder that even in a crisis, there are opportunities for those who are, well, ready for them.
Absolutely. So as we wrap up, I want to encourage you, our listener, to think about what really resonated with you today. How could you apply these principles in your own life? Not just investing, but anything where taking a calculated risk could lead to a big reward.
Maybe it's finally time to start that side hustle you've been dreaming of, or investing in your education, building your skills.
Or even just speaking up for what you believe in, even when it feels a bit scary.
The point is, this wasn't just about the stock market. It was about mindset, strategy, and being brave enough to go after things that others might miss.
So as you go about your week, keep these ideas in mind. Think about your own risk tolerance, explore those areas where you might have some untapped potential.
And remember, fortune favors the bold, right?
Thanks for joining us on this deep dive. Until next time, keep exploring, keep learning, and keep pushing those boundaries.